What's going on, loonies? Hope you enjoyed that hidden gem from yesterday. Out to post another video here. We're gonna talk about some stuff in the comments, and then I'm gonna talk about preferred shares, the structure thereof, how to do research, how to think about them, and just investor analysis in general on looking at preferred shares and some acquisition type stuff. Mr. Wizard Man, we got inquiry in the chat. Ticker BATL. They completed a merger. Well, they're about to complete the merger, but they're getting bought out and asking what thoughts are about it. We're going to talk about it, but without further ado, let's look into. We'll start with the actual merger stuff and Battalion Oil Corporation. All right, so I'm going to type in Battalion Oil Corporation and Seeking Alpha. Um, you notice that there is no dividend rate here, okay, listed. All right, so just because on Seeking Alpha or just the basics of any stock ticker and any platform, there's no dividend rate. This dividend rate or dividend yield portion refers to common stock dividends, all right? But it does not address preferred share dividends. Let's go to the financials. This is how you can tell, all right? You go to the income statement, not the cash flow. You can see it on the cash flow, but more so on the income statement. All right. If you go over to net income, right under the net income portion, and as far as the exclosures for common net income to common exclosure or extra items, if you will, you'll see this preferred share dividend payout portion column right under the net income. So if you've been following along, if you didn't know, common stock dividends, all right, you have your different types of dividends, all right. So a lot of investors know that your common stock dividends are paid through the free cash flows, which are the leftovers of the profits after expenses and incremental liquidity coming in month after month into the company. And companies have pretty much paid common stock dividends with the free cash flows. All right. When it comes to preferred shares, these are a different class of shares that take priority over common stock dividends. These are paid out first, and they're not paid through the free cash flows. They're paid through the net incomes. So to identify the ratio and safety of the actual preferred shares, you have to look at the net income, because that's what's paying out to the actual preferred shared stockholders. All right. Preferred shares are a hybrid equity debt instrument, which is pretty much contradictory, but that's why it's a hybrid derivative instrument. A lot of the time issued out to a lot of the time private equity, different whale investors, and so forth. All right. Sometimes these preferred shares are issued to the public on series rounds, and these smaller companies on the come up, like Battalion Oil Corporation, this is more of a venture style company that is public but dabbles in the private equity markets. All right. So as you can see, we go back to the net income on the income statement. All right. From our three financial statements, your income statement, your balance sheet, and free cash flows. Okay. But when it comes to preferred shares, we're looking at the actual income statement. All right. You see they had negative net income of 3.0, but they paid out 12.0. So they have negative earnings paying out to the actual preferred shareholders. Okay. Not sustainable if the company goes under. A company can keep up payments through other means of sacrificing other ventures, cannibalization of machine operating equipment, and so forth, or cutting in different areas in tax accounting and so forth to actually pay those preferred share dividends. What is the result? Well, it hurts the energy of the stock. As you can see, there was a acquisition that we were talking about in the chat. All right, and we'll look into the acquisition. Okay, and pretty much they are getting Battalion Oil Corporation is getting bought out by Fury Resources, which is a private equity. All right, private entity. They're not a public company. So what is the play? What is the overall play about Battalion Resources, how I understand it? And Mr. Wizard could have a different opinion or have a different thesis that I don't know about, but this is pretty much the setup of what I'm seeing. With the actual company, this is a acquisition arbitrage play of an investment, all right? So if you're buying over here, they had a acquisition announcement earlier in Q4, Q1 of 2023 for, I believe, $10 a share or $9 and change a share. That acquisition announcement did not fall through. It did not go through, so stock went down. Okay. Well, as the stock goes down, you hear a rumor that there will be an acquisition. You buy the rumor, and then when the news comes out, the stock hits or pumps up to the acquisition price target on the shares, which in this case is $7 a share. All right, $7 a share. All right, and this is a merger acquisition, so they're being acquired to merge into Fury Resources, that private equity expansion company that dabbles in oil exploration and drilling and so forth. So the actual play was to buy, once again, to buy the rumor, sell the news. And if this acquisition does not go through for whatever reason, stock goes right back down. All right, until it, unless it closes out, and then you just get your shares bought out for that price. All right, and this is more so, you see this a lot with more venture capital, not as liquid stocks. There, a lot of it is rounds, seed rounds of milestones to be hit. There is a lot more risk in the actual private equity market of investing. However, there is some more fixed rewards based on milestones of buyouts and seed round dilutions. I'll probably do a hidden gem on a lot of how that works some other time. But Battalion Oil Corporations, they're barely public. And if they do not capture enough volume liquidity in their public venture on being on the public market, the actual private equity firms can still come and buy them out. All right. If a company's public, they can be taken private and be bought by anybody, including the private markets. So Battalion Oil Corporation did a lot of preferred shares. Okay. And why did they do a lot of preferred shares? Well, they did not want to add too much debt onto the balance sheet, even though it appears they're way over leveraged anyway. And they also did not want to dilute the actual equity, so they issued out preferred shares. If you want to do more research on preferred shares, I'm going to show you how to do that real quick. Let me see here. We'll look at Bank of America, PR, and then you'll see all the different, you type in the ticker .pr, and then right under should list all the preferred shares. Let's click on the first one, for example. We'll do some analysis on this preferred share for L series. 5.62% yield, but the initial yield of the preferred shares is 7.25%. As you can see, the actual chart on it, really flat. These preferred shares have little volatility. There is variable portions of the value of these shares, but they're connected to treasury markets and the debt market on yield. So if the interest rates are being cut by the Fed, which they are, preferred share equity should increase. So preferred high yield preferred shares should increase in value through the demand of yield liquidity in the actual from the debt market and investors chasing yield. Okay. That's how you look into that. How do you research the terms of preferred shares, get into the details of preferred shares and what kind of deal you want? Well, you go to, this is how I do it. I go to Quantum Online. You have a quick search for the ticker symbol, and I just type in Bank of America, and then I hit search. All right. It'll show up the basic stock chart, but underneath it'll say find all related securities. Let me maximize this. Find all related securities for Bank of America on Quantum Online. You hit that, and this should list all of the derivatives, all the different instruments out there that the stock is actually, or the company is issued out. All right. And you can see different types of derivative equities. This is going to be another hidden gem collection episode on the different types of derivative equities that are actually out there and these different instruments and what they do. So you'll see your floating rate shares. You'll see there'll be warrants out there, preferred shares, preferred convertibles, different clauses of these derivatives. Some have buyout clauses, some have convertible option clauses, some have infinite rollover clauses, which you'll rarely see. You'll see different types of warrants and convertible bonds and all different types of stuff. Okay. But the play with the Battalion Oil Corporation is, I think we're pretty much a little bit late to the party. If you were looking for equity capital appreciation, the play was to buy before the announcement, and the shares for ticker BATL are going to actually just keep running at a flat ratio. If there's lack of confidence in closing the acquisition, you might see a little dip in the shares, and the spread between $7 a share and what it's trading at right now is your actual arbitrage profit of actually closing on the merger deal. Okay. The other play was to purchase preferred shares. These preferred shares are being rolled into private equity. So if you had preferred shares of Battalion Corporation, these preferred shares are going to be rolled into preferred shares of this private corporation. So you'll own preferred shares in a private corporation, and to keep track with that. Now, these actual preferred shares are owned by different financial institutions. A lot of these are LLCs, also known and can also be known as financial syndicates. And these financial syndicates dabble in equity and hybrid debt instruments. If you notice the name of the Patreon, is the Looney Syndicate. Okay. So the word syndicate, all right, these should paint a little, I'll give you the little foreshadowing of the plans for my Patreon going forward years from now. So you can think about that, maybe ask me some questions about my plans for us and how we're pretty much going to all get rich later on. All right. I hope you got some value out of this. I know it's very complicated if you do not dabble in preferred shares. As far as my thought process on this type of strategy and arbitrage plays of acquisitions, I view acquisition plays, getting in just for the acquisition arbitrage, to me is kind of a cheap, quickie. All right. I'm gonna get a quick double and I'm gonna get out. And there's nothing wrong with it. You get the bread how you get the bread. Me personally, I'm too lazy for that. I just identify the equity, I buy and hold, get a big long position going, and let the equity just run and perform. Let the management do its thing, so that years from now, I'm getting way more multi bags on my actual investments. And that's just my thought process, but doesn't hurt to have some arbitrage plays on the side. I'm not really interested in that. I'm focused on building the growth portfolio and so forth. Anyway, hope you got some value. Comment down below. Hit me up on the chat if you have any questions. Take it easy and have a good day.